Every single day, millions of hardworking Americans fall into a hidden economic trap that is meticulously designed to quietly strip them of their purchasing power. They wake up early, battle through exhausting traffic, trade 40 to 60 hours of their week for a steady paycheck, and then dutifully deposit their leftovers into a traditional savings account. They do this because they were taught it was the responsible path to building safety. But in the current economic landscape, this standard playbook is completely broken. The financial institutions are turning your hard-earned cash into a depreciating asset while you sleep. Welcome back to Finance AI Stories. Today, we are going to break down the exact mechanics of how the modern financial system liquidates the middle class and show you the precise blueprint to completely insulate your capital.
To understand how we get out of this trap, we first need to look at Alex. At 30 years old, Alex did everything exactly by the book. He secured a stable corporate job, limited his personal spending, avoided toxic credit card debt, and maintained a pristine savings balance at his local bank. He believed he was slowly building a foundation for early retirement. Yet every single time Alex reviewed his quarterly statements, a cold sense of anxiety settled in. Even though the numbers on his screen remained completely stable, his ability to actually purchase real-world goods was visibly deteriorating. The costs of basic housing, energy utilities, and groceries were climbing at an aggressive pace that completely outran the pathetic interest rate his commercial bank provided. He was working harder than ever, but his capital was dying in real time.
This is the grand illusion of the modern banking industry. When you deposit your money, the bank does not keep it safe in a dark vault. Instead, they immediately leverage your capital, lending it out to institutional investors and corporate developers at high interest rates. In exchange for providing them with this fuel, they hand you a fraction of a single percent. When true economic inflation is factored into the equation, keeping your cash in a standard account guarantees that you lose wealth every single year. Alex calculated that relying on manual savings to build a safe $500,000 portfolio would literally take him over 45 years of active labor. In a world driven by aggressive monetary expansion, the old advice of just saving your money has effectively become a form of financial suicide for the middle class.
The definitive turning point occurred when Alex stopped listening to traditional media and started studying the structural habits of the top 1%. Real wealth creation is never built on active physical labor alone. The elite do not trade hours for dollars, nor do they rely on volatile, speculative trading trends or overnight hype. Instead, they design closed-loop automated systems that operate completely independently of their personal time. They use predictable, mathematical compounding forces to acquire productive assets. Alex made a critical mental shift. He realized he needed to stop acting like a passive consumer who hoards paper currency and start acting like a strategic financial architect. He decided to completely automate his economy, removing human error and emotional decision-making from his investment process permanently. The very first structural pillar Alex built was the absolute automation of his income allocation. He realized that the single greatest threat to a growing portfolio is not market volatility, it is human psychology. When money sits idly in a checking account, lifestyle inflation inevitably creeps in. To solve this, Alex configured his banking system to automatically trigger a capital transfer the exact minute his monthly paycheck arrived. Before he could even see the funds or think about spending them, a predefined percentage was instantly routed away from his reach. It moved directly into low-cost, broad market index funds. By making this process completely hands-off, Alex bypassed his own emotional temptations. The money was invested into the global economy automatically, transforming him from a consumer into an asset owner before he had a chance to make a mistake.
Let's look directly at the underlying mathematics of this specific approach. Most retail investors fail because they desperately try to time the market, buying when things look good and panicking when prices drop. This emotional cycle destroys wealth. By utilizing absolute automation, Alex unlocked a strategy called dollar cost averaging. Because his system bought assets at the exact same intervals every month, he automatically bought fewer shares when prices were high and significantly more shares when the market crashed. Volatility was no longer a terrifying risk. It became his greatest mathematical advantage. He no longer had to read financial news or look at daily stock charts. His automated engine systematically lowered his average purchase cost over time, completely outperforming 90% of professional day traders while requiring absolutely zero daily effort from Alex himself. As the months rolled on, Alex's automated system silently crossed its first massive psychological milestone, the $100,000 mark. In the world of personal finance, this specific number is universally recognized as the absolute hardest barrier to break. The legendary investor Charlie Munger famously stated that getting the first 100,000 is a grueling grind. But once you achieve it, the physical physics of compounding returns completely shift. Below this number, your portfolio growth is almost entirely driven by your manual contributions. But once you cross this critical threshold, the accumulated capital begins to generate its own massive momentum. The interest and market gains start doing the heavy lifting, frequently matching or completely outpacing the actual amount of money you actively contribute from your corporate paycheck. To supercharge this newly discovered momentum without increasing his personal workload, Alex immediately integrated a dividend reinvestment plan, commonly known as a DRIP. Every quarter, the elite corporations held within his index funds distributed cash profits back to their shareholders. Instead of collecting this dividend cash to spend on temporary luxuries, Alex's system was hard-coded to immediately reinvest those payouts back into the exact same funds to purchase fractional shares. This created an incredibly powerful, self-sustaining feedback loop. More shares generated higher quarterly dividend payouts, which then instantly purchased an even larger volume of shares. The system was now feeding itself in a compounding spiral, building wealth entirely in the background, while Alex was completely focused on living his life and enjoying his family. A massive misconception in our society is that you need a multi-million-dollar inheritance or an extreme six-figure tech salary to build real wealth. This is mathematically false. The real secret lies entirely within the structural efficiency of the assets you select. Alex did not buy complex financial products or expensive mutual funds managed by Wall Street brokers. He focused exclusively on ultra-low-cost exchange-traded funds that track the entire index of the American economy. Because these specific funds carry internal management fees of less than 1/10 of a single percent, practically every single dollar his portfolio generated remained inside his system. It compounded quietly, unburdened by the parasitic advisory fees that quietly drain the retirement accounts of ordinary citizens. Let us analyze the precise milestone projection of how this automated engine scales over time. In the initial years, the exponential growth curve looks almost completely flat, which causes most undisciplined people to quit. But around year 7, the mathematical trend line begins to bend sharply upward. Alex watched his total portfolio balance aggressively transform from a modest 5-figure sum into a massive, self-propelling financial machine. He was no longer trading his vital energy and hours for paper dollars. He had successfully engineered a permanent digital worker that operated 24 hours a day, 7 days a week, with zero downtime, zero holidays, and an unbreakable focus on compounding his personal wealth. However, the system was soon tested by a severe macroeconomic crisis. During year 9, the broader stock market suffered a massive technical correction due to rising global instability. The mainstream media headlines screamed of an impending economic collapse, and retail investors panicked, selling off their portfolios at historic losses. This is the exact moment where absolute automation saved Alex from financial disaster. Because his system was entirely mechanical and required no manual confirmation,
His automatic transfers continued to execute flawlessly at the absolute bottom of the market cycle. He was automatically acquiring premium, high-quality corporate assets at massive historical discounts, while the rest of the world was frozen in fear.
If you feel completely ready to break away from this exhausting daily cycle and start engineering your own automated financial system, take a second to hit the like button directly below this video. It is my direct signal that we are perfectly aligned and ready to build serious, long-term momentum together. And of course, make sure you are subscribed to the channel so you never miss the next critical phase of our financial breakthroughs. Now, let's look at the exact tax-advantaged strategies Alex implemented to legally shield his rapidly growing $500,000 portfolio from the hands of the government.
To ensure the state didn't take a massive bite out of his automated wealth, Alex strategically structured his investments inside specialized tax-advantaged accounts. By maximizing his automated contributions to structural vehicles like a Roth IRA and a traditional 401k, he effectively built a legal fortress around his capital. In a standard account, every capital gain and dividend payout is taxed annually, slowing down the compounding process. But inside these specialized accounts, his asset appreciation grew completely tax-free. This simple structural optimization saved Alex tens of thousands of dollars over a decade, allowing the absolute full weight of his compounding returns to remain untouched and working entirely for him.
As the portfolio successfully crossed the $500,000 mark, a profound psychological shift occurred inside Alex's life. The completely passive yield generated by his massive capital base was now officially large enough to cover his baseline societal living expenses. He had achieved genuine structural freedom. He no longer walked into his workplace because he was trapped by financial survival obligations. He walked in simply because he chose to. The automated machine he had set up years prior had completely decoupled his human survival from his active physical labor, unlocking the single most valuable and finite asset in existence: total control over his personal time.
Building a $500,000 portfolio does not require financial genius, high-risk gambling, or endless hours analyzing complex stock charts. It simply requires an absolute rejection of the broken traditional savings model, a commitment to systematic automation, and the patience to let compounding mathematics execute its work. The digital tools required to build this exact automated system are fully available to every single person watching this video right now. The ultimate choice is yours. You can choose to stay on the treadmill, or you can build your own engine. Thank you for watching Alex Wealth Lab.